Hi everyone. So let's start today's analysis. Before we start, I just want to inform that yesterday's video I made the video, but due to some technical glitches, it got uploaded very late. It got uploaded in the morning, but it had a lot of facts, and I would really suggest that you should watch this video. Not because it is very relevant to the market or something, but it was very informative, and it can give you a lot of insights on how to analyze the things and what factors we should see when we are looking at the markets. So we'll start with today's analysis, and we'll start with the global factors and more importantly with the Trump meeting and Mr. Modi meeting which happened yesterday. The meeting was there between Mr. Trump and Mr. Modi, and it was quite fruitful, I would say, but not to the extent that we would have liked for the markets. I'll tell you why in detail, although the details are not out. But what I could infer from the probably the announcements, I'll just tell you why it is slightly negative also, and for our markets as such, and why it is positive. Of course, we all have seen, and you must have also read in newspapers and various TV networks as to what has happened. But let me just touch my point of view. Before that, we had a producer price index, which is the inflation data from US, which came in the evening yesterday, and it came around 0.4% month on month. The expectation was around 0.3%, but it came 0.4%. So it was slightly higher than expectations, but it was lower than the previous month's inflation, which was zero point 0.5. So market slightly rejoiced it, and there was a very sharp reduction of bond yields, and the bond yields which went to around 4.63 kind of a levels after the CPI inflation report of US. It cooled down drastically, almost given up all the gains it did on yesterday, day for yesterday, and it was trading around 4.5, 4.52 kind of levels. So that's one thing which has happened. That's the good news in terms of that the bond yields have come down. The dollar index reacted even more sharply, and it was trading at around 107.4 kind of a level, and today it was trading around 106.8 kind of levels. This is huge reduction. So I've been telling you to many of my videos that it is the 110 level dollar index has actually topped out. I think the confirmation is again coming from there. Uh, the rupee slide has also probably is over to a certain extent, and the levels that we have seen of around 87.95 kind of levels, I think the bottom has been done. It will be very rare now we'll be able to break those levels. We may have spikes here and there with Trump, whatever declarations he do from time to time, but probably the bottom is made. Why these two things are very important? Because these two things are in the minds of FIIs, which have led to the massive selling in January and February month of this calendar year. Now, these two parameters cooling off. So, bond yield cooling off in the sense it is trying to form a top. So, if you remember, bond yields have gone to across 4.8 kind of levels in January. Now it is 4.5, so approximately 0.3% down. It's look like it has also topped out. We'll not be seeing the bond yields now those levels of 4.8 again. Dollar index 110, I think it has topped out, but I've been telling from last many days as well. I think rupee is also bottomed out in terms of its slide. So these three are the very big takeaways in terms of US inflation, broader indexes, and the overall the market how it is looking like. Crude, of course, has been sliding continuously. It is hovering below $75, and I think it will remain benign with the kind of negotiation which has started between Russia and Ukraine. I think the crude will remain benign, and if at all the sanctions are lifted from Russia, which might take some time, but if at all they are lifted, we'll get 10 million barrels of crude per day extra in terms of supply. That's again a good news. Uh, One of the important takeaway was, of course, the Mission 500, which has been set between Mr. Trump and Mr. Modi in terms of that the trade between the two countries of current $130 billion odd will reach to $500 billion by 2030. So it's around approximately four time shift. Now, the majority of the trade which will happen between India and US in terms of import from US, it will be mostly oil and gas. It will be mostly your defense related things, and to a certain extent, I think Elon Musk, which he has met before Trump meeting to Mr. Modi, and it was a calibrated and a diplomatic move by US. I think we'll see now Tesla cars in India very soon. So that's a given now that we will have a competition of EV. We will have Tesla cars coming in. and that will give us competition. Now, good thing is that if you combine all these things, probably India and US have discussed that we want to reduce this reduction of trade imbalance in this way. If that stands and if agreement is done, that means that we will not be seeing a large tariffs on India. So if that kind of arrangement has been done, it is looking good. And I think it is the same kind of arrangement. Seeing the body language of both the leaders, it was looking like that. Why I told it slightly negative is on the defense part. So we were, a lot of. So if you see the recovery of, if you see the recovery, or let's say the gains which we have done in the Indian stock markets or financial markets, was due to the large capex and make in India kind of theme, in which defense have also played a very important part. Now it is looking like that a lot of this capex will divert into US. If at all, we are not cutting some things from other countries. So we take a lot of defense imports either from Israel, France, Russia, and US. So US we had decreased during Biden administration, but now again it is increasing during Trump administration, which means that ultimately the Make in India will take a slight backing, and that's the reason why today you saw a lot of fallout in terms of PSU stocks and the government companies. The reason is very simple: this capex will slightly reduce, and the competition which will come from Tesla and other EV markets when we start reducing the import tariffs and the taxes for these companies, we'll see one more disruption in terms of our automakers. When it will happen, we have to wait and see. But these are two takeaways which I can see from this thing. Apart from that, I think the kind of welcome which Mr. Modi got, the kind of address that he made in the whole arena was phenomenal. The kind of, the India campaigns, India slogans, the kind of speech, the way he delivers, his charisma, absolutely phenomenal. I think I'll not be too harsh in telling that Mr. Trump in front of Mr. Modi yesterday was not even looking like American president. It was looking like for Mr. Modi's show. The way he speaks, the kind of jargons he uses, the kind of emphatic language, the way he delivers, and probably he's a, I don't know how much literate he is. We all know that he's a chai wala, whatever, I don't know to call this term, but the way he speaks, he brings a lot of life into the stage, and he connects heart to heart when he's talking. And that's the reason, Mr. Trump also told during the press conference that Mr. Modi is a very hard negotiator and is even hard negotiator than me. I don't know whether it was a sarcastic statement, whether who has gained more in terms of meeting yesterday, we don't know. I don't have the answer as of now. Who has gained more in terms of the meeting? But the way he was speaking, probably one or two things which we lost in terms of this defense war. And I don't know. This is only my assumption because it's not that India would have also done a lot of deal in terms of H1B visas. I think those deals would also would have been done in textile sector, for example. Other exports also in terms of gold, jewelry, and diamonds, etc., which we are doing to US anyways. I think they would have gained a lot, but I think this is what we would have lost also, especially in terms of defense, where I think Make in India will take a slight shift. Although there was a very strong deal which is going to be announced between HAL and Russia today, and it's a very, very large deal. But I think that was being worked out from long ago. So this link would have not have been there. But again, that's the thing. So I already spoken to Mr. Trump, Mr. Elon Musk has spoken. So I think Starlink and Tesla coming to India is a given now. It's only when it will come and what disruption it will make, we have to wait and see. Uh, this is again from the US markets. Now, what in terms of announcements of his reciprocal tariff, what has happened is he has signed the paper, but he has told that it will only be implied after his policymakers will go in detail in terms of implications and which product to be put and what countries, what kind of tariff to be put. So it was a joke. If you have signed a paper and if you have not even studied how much tariff to put on in which country, in which product, it was a joke. It was just a pure gimmick. Mr. Trump is really worried in terms of inflation, how it is going up. He is now worried in terms of tariffs. And that is why I'm saying just see my video of yesterday because I've discussed in length why yesterday's and day before yesterday inflation was not good for US and it is good for other markets, including India. It has a lot of insights on that. Just have a deep look into it. I'm not going to details because then this video will become long. So, and Mr. Trump, but there are two negative news also. So one thing is it has been delayed by up to 1st April. So market will take a relief. But two negative things. One negative thing was that yesterday when there was a discussion that Mike Johnson, his policymaker, his advisor, has told him that not to put the tariffs on autos and pharma. In that, Mr. Trump has taken out the auto part, which means will put tariffs on autos. But yes, on pharma, he has not spoken anything, which means pharma will be out. So he's still trying to put tariffs on auto. So whichever countries are trying to export autos or auto components to US and other things, they will face problems. So that's one thing. Second, a very surprising thing what he has told is that even VAT or a local tax, I will take this as a tariff in my calculation. That's very absurd because it does not work like that. Like that, taxes are taxes will be applicable even for the local company also and for the foreign company both equal. So it is par to par. So I don't know why he said that, and I don't know why the word VAT was used. Anyways, in India, VAT has been lifted. Now we're into GST regime. But economically and calculation point of view, it doesn't make sense because these factors nullify generally each other. But that's what he has told. So that's again slightly he has increased his domain of tariffs. So I don't know. Technically, it was not correct, but this is what he has said. Now, uh, so this is what about the Trump's meeting and Modi's meeting. Overall, I think the meeting was good. The way the body language was speaking and all those things. Only thing is that India have to make US a large partner, and India has to spend money now from its pocket for at least defense part and oil and gas. Suppose it will be a they will reduce their imports from Saudi Arabia, and it will they will increase from US. So it's probably same thing, and the rates of US crude oil and Brent crude and this almost remains quite equal in the sense. So I don't think there will be an impact on that, but yes, defense definitely there will be an impact. So if you have to even align your portfolio accordingly, you should do that. Now, uh, coming to the Indian markets, the pain which we have seen continuously over and over every day, whatever good news comes, still we don't react. So yesterday, if you see the US markets, after this news came that the tariffs have been delayed up to 1st, 2nd April, there was a spike in the US markets and they all closed in green and very decent kind of gains. But just Nifty also was showing in green. We opened up again in green and then there was a major sell-off. Again, which I told yesterday also that uh, we are lacking that volatility to make the bottom to consolidate the base. Today, I think we got again that kind of volatility because the range was higher. Today, we traded around 400 points range and we broke those kind of levels intraday at least in 22,800. Although we closed above 22,950 kind of a level, which is again a great level. I would say that we have not closed on 22,800 kind of a level, which means that that base has been forming very solidly now, and probably one or two sessions probably will be able to fortify or very strongly say once we start closing above 23 150 or let's say 23 kind of levels that yes, the bottom is in place and now we'll not be breaking those levels very soon. And then the price action is showing that uh, those kind of consolidation is happening. So I told day for yesterday also some kind of short covering would have happened. The way the market scheme was telling, we did a double bottom yesterday, day for yesterday. Then there was smart recovery. Today we did a triple bottom. Again there was smart recovery. I think the short would have been covered. Yesterday also we saw stock futures buying by the FIs. Day for yesterday also we saw the stock futures buying by FIs. I will not be surprised if today also we'll see negative figures probably in cash, but again, we'll see some kind of short covering again in terms of stock futures or index futures today. This is what I'm assuming. Although this claim would have been even more helpful to us, have we at least closed in green? That was the only negative which I thought that we would have at least closed above 23,000 levels, but we could not close. That means that a small capitulation is still left. Yesterday also I told that a capitulation is left, and I think now also I would say the small capitulation again left because we should have closed in green after all the short covering whatever FIs would have done, and it would have closed in green. I think that would have been a good scenario because then the long would have also been added. But since we're closed in red, and I think probably whatever shorts they want to cover is not fully done, a small capitulation is still left out. It will happen Monday, Tuesday, Wednesday. We don't know, but it is still left out. It's looking like that. Apart from that, the kind of recovery which happened in the second half was pretty encouraging, and it is making our view again and again firm that yes, we are very near to bottom. See, it will happen or not. I'll give you some figures for that. So India's market cap when we were making our peak 26,400, it was $5.14 trillion. Guys, $1 trillion of market cap has been wiped out. Now our market cap is just $4 trillion. That means we have lost 20% of our market cap. So don't see only Nifty, Midcap, Nifty, etc. etc. We have lost 20% of our market cap. $1 trillion. It's almost equal to one third of our GDP. That kind of massive correction has happened. It's not a small correction, it's a massive, massive correction. Also, the figures are telling that the kind of leverage positions have come down by 85%. Yes, there are some more leverage positions left out. I don't know whether the market will try to kill those positions also, but a majority of it, a chunk of it has been cleared off, and those kind of positions are not in the system now. One more thing, figure I'll give you. Our market cap to GDP ratio was 140% when we were at peak, approximately 139% to be precise. Now it is hovering around 113%. That's all. So again, at a comforting level, this is a figure. This is a benchmark which Mr. Warren Buffett uses a lot. He generally tries to time his moves depending on this market cap GDP kind of calculation, because it really works out. That calculation really works out because your stock market capitalization will actually give you a parameter in terms of GDP. See, it will cover all 90% of your GDP, because the kind of basket that you have in the stock market, very less companies are left out, which are not covering to your GDP. So if at all you have reduced in terms of percentage, which means you have corrected a lot and you have reached to a decent level. Mr. Warren Buffett likes these levels to around 110%, 110 to 115, at the max up to 120%, depending on what is your future growth in progress. He wants to be around 110 to 120%. We are in that zone now. We are in that zone. Therefore, yesterday, anyways, I've told you that the earnings of Nifty now, well, let's say our valuations now are trading at around 18, 18.5 forward earnings now. Our average has been around 20 or 20.5. So we are well 2% lower than that. That again gives you a comfort that the Nifty valuations are very, very stable. They are actually below normal now. And it happens in that. It always happens in markets. When you are going upwards, you'll always try to cross the benchmark level. When you're coming down, you will try to cross below the benchmark level. You are not always at fairly levels. Now we are below the fair levels. I'm just trying to give you a figure. One more figure I'll give you, very important and very interesting. You know how much the US markets are trading in terms of GDP and market cap ratio? 205%. 205%, guys. Yesterday also I told my video, this market is entering into a bubble category. Nasdaq is absolutely overvalued and it's a bubble category. It will fall like anything. I don't know when it will happen, but it is in a bubble territory. That's the reason why Mr. Warren Buffett is sitting on cash of over 14 lakh crores. This is the highest level of cash Mr. Warren Buffett has ever sat on. The reason is very simple. You're getting 5% return from your bond yields in US. The stock markets are trading at, guys, 205% of your GDP. I mean, and there many of the companies are listed. It hardly left out that a company is good in terms of value and it is not listed on the exchanges, which means it is covering your major chunk of the GDP, and if it is trading at 205%, I mean, it is unbelievable. It's a bubble which will burst out very, very soon. I don't know when, but it will burst out. I will not recommend anybody to invest, at least in US markets now. And that's the reason why the dollar index is coming down. Dollar index coming down to 106.8 levels is very, very interesting. I tell you why. When this Trump was winning the elections, you know what the dollar index was? At 105 level. It went to 110, or now we have touched 106.8. I will not be surprised that the dollar index will again come to those kind of 106 or 105 kind of level, which will be a no-brainer that the EM markets will boom from here. You will see a large reversal of FI money coming into emerging markets. Once the dollar index is 105, and we are hardly a distance away. It is just 106.8, which is already seeing the dollar index to be. So I'm giving you very insightful and very important data and very important knowledge. Just listen to it. I don't know what decision you will take, but this is what my analysis is saying. Again, one more data came in the afternoon, which is the wholesale price index of India. It just came at just 2.3%. The expectation was around 2.6%. So 0.3% lower. A lot of FIs, if you hear their interviews, they're waiting for the inflation to cool off. We have already seen the tax cuts which the government has given in the budget. If inflation is also coming down so drastically, which means more money in the hands of people, you will see the consumption drive going faster, very fruitfully now in the coming months. I think the stage is set. And again, I'm telling you, the market will read whatever is going to happen 6 months after, and it will take into price now. Market will react to those things. They will start reacting to those levels now. They will not wait for these all numbers to convert. I know the tax advantage will only start from April onwards. But since the inflation have already come down, and in the mindset of the consumer, if you think that I'll be saving more money from April onwards, he'll start spending now. Although the biggest impact of all these things will come in the season, festival season of August, November next year. You'll see a bumper quarter for that year. But still, anyways, our base will be very less because we've given bad results in this quarter. Whether it is Q1, Q2, Q3 of this financial year, all are bad. Next financial year, we'll have a low base, and anyways, we'll have this consumption boost. I think we are rocking from here, just rocking from here. So that's again one good news in terms of wholesale price index. Uh, I think just one more caution which I observed in terms of the results from the gold companies, and see what has happened is these gold companies have taken a lot of hit in terms of when there was this in July when it was announced a tax cut, import duty cut, and there was a lot of they have to take a lot of loss because of the inventory which they had, and with the kind of steep rise we have seen in the gold prices, and that has affected the demand a lot in terms of consumers because it was a sharp rise. I mean, when there's a sharp rise in gold prices, you generally defer your decisions on buying gold until unless it is very essential and necessary. So that is why these gold companies are seeing a bottom. It's a good time to invest again in gold companies because gold prices will now stable down. The upside is also very limited. The downside is also very limited. It will remain sideways now. It's looking like that. It will remain sideways. 2-3% up, 2-3% down. I think that's the range of gold, which will means that you are now getting these gold companies at very low prices. So it's a good opportunity. Similar is the microfinance companies like Ujjwal Small Finance Bank, your Fusion Small Finance Bank, your the companies which are into microfinance, Jana Small Finance Bank. These are available now at very cheap prices because of the consumption boost, more money in the coming in the hands of consumer, which means he will try to repay the loans to the banks. So the whatever NPS fears were there and whatever the recovery was getting slower in the microfinance companies because of which they took a lot of hit, that all will look like to cover up. And the kind of liquidity which again RBI is infusing, which means and the kind of government spending coming up, which means more hands, more money, more returning power in terms of money which they have taken from the bank. So again, good news. So these two sectors also you be very vigilant. These are available at very cheap prices. So mid cap and small cap index, I don't know what to say because the leverage positions are being killed brutally, and the margin positions was very and that's why we say that we should not take loans and then take the positions and all. But people generally, I don't know whether how they operate, but they have taken a lot of hit. I think the figures are telling that 85% of the trades are out of the system now. It's probably as I told that one small capitulation is still left out. When it happens, probably we'll be out of the markets now. But all the global parameters, etc., everything is looking very benign. The stage is set for us to go forward from here. Whether it happens on February or March, it's difficult to say. But from April onwards, certainly things are looking very good. How much market will discount now? I don't know. But it will be now very difficult for any foreign player not to enter into Indian markets now because of all the parameters that we've discussed today. So this is what I would say. Another thing is that the way the Reliance was reacting today, it was still positive. ICICI Bank was still positive. It is looking like the major stocks are now very close to their bottoms, and you will start whatever we'll see a recovery in terms of Nifty or the stock market as such, we'll see the first sign of recovery from Nifty stocks. So in that also out of the banking stocks and Reliance. These are sectors which should lead the Nifty going forwards. And our hope still remains because we have closed about 22,800, which means that triple bottom has been made. Market generally don't break these kind of levels. अगर market को आज गिरना होता, then we would have closed below 22,800. If we would have added shorts at 22,900 levels, 22,850, 22,800 levels, we would have closed pretty lower than that. I don't think it was just a game to go to those levels to cover their short, which has happened in the second half. It has happened day for yesterday also, it has happened yesterday also, and today also it has happened in that way. But since we didn't close above 23,150, we might have small capitalization once again. That will be a buying opportunity. That is my entire analysis on today's and yesterday's things. With this silent video, but you have a great time. There's a weekend coming ahead. Enjoy. We have seen a lot of red color, and our all minds are so disturbed by all these things. So have a great weekend. Enjoy. Watch some movies, watch some OTT serials, etc. And have a nice weekend. Thank you so much.